welcome to Global Business. I am Imewori Uhemohai. Now, did you miss last week's episode? Of course, you can go back to our YouTube page to look at season 14, episode 1 of last week, Global Business. So, welcome to season 14, episode 2. Today, we shall be looking through some webinars, in fact, bringing you stories concerning export expansion grant and looking at traders in the Southeast and how they should move to digital trade. In fact, this movement to digital trade, which COVID has made every one of us go through, will be a two-part discuss. So we'll look at the webinar today. It was a roundtable organized by PDF Bridge program, and we'll be looking at both webinars on the program.
Have you missed out on any of the editions of Global Business? Then what are you waiting for? Visit our YouTube channel, youtube.com/Global Business on AIT, to catch up on all episodes of Global Business. Also, do follow us on Twitter at Ine Ohio and our Facebook page, Global Business on AIT, for more info on Global Business. You can also send us a mail, globalbusinessonait@gmail.com, for feedback and enquiries.
Today is an opportunity for to bring the best minds in this area to interact and hopefully help to improve the implementation of the Export Expansion Grant, EEG. An EEG assessment. Today we're looking at an EEG assessment which provides evidence-based information on EEG implementation to guide relevant stakeholders in reforming and repositioning the scheme for greater effectiveness, was commissioned by PDF2, the precursor program to PDF Bridge, which today brings you this event through its trade policy work stream. The study analyzed the impact of the grant on beneficiaries prior to its suspension in 2013. And the post-suspension implementation from 2017. It also investigates the challenges faced by beneficiaries in their attempts to access the grant.
Government would do well to promptly settle all outstanding EEG claims as approved by the Federal Executive Council. I think the Nigeria Export Promotion Council secured Federal Executive Council approval for settlement of EEGs in the region of 350 billion. Of this settlement, there is a case for 38 companies who by omission or commission were excluded when the final list was being sent to the DMO. So there is also a case in our recommendations for the prompt payment of the benefits to these 38 companies. So EEG requires policy stability, predictability, and continuity. We recommended there should be an increase, at least growing year by year, to show that not only that export is growing, but to enable new exporters to come into the scheme. When we started in 2013, where we started from, EEG was at 30%. As of today, it is 15%. That's the reason why you have in bracket there, not decrease. So we also recommend development and implementation of pre-export market access support. You remember that in my opening slides, I had defined the EEG as a post-shipment incentive. So you need to begin to export first before you can access the market. And this is where we make the case for the development of a new form of incentives that actually propels pre-shipment. So the creation and legislation of the Export Expansion Grant Fund. Let me take a second to explain this. The Export Provisions and Incentives and Miscellaneous Act actually is already a legislation. But in terms of the export expansion grant, it has not been legislated. And that is the reason why we found out that it could have been subjected to all the somersaults. It is hanging out there. We believe that we need legislation. Then the Export Development Fund, which is actually supposed to be the pre-shipment incentive, we believe that it is time now to activate and endow it. It will help arrest the preponderance of policy somersaults, and then the full automation of the EEG application process. Again, it was after the submission of the report of this study, we are aware that the NEPC has gone very far in ensuring the automation of the application process. Now you submit your baseline data and applications online. We believe that we are at a point as a nation where we must either export, and by export, I'm not talking non-oil export, or perish. And the only way to ensure forex supply and show up the exchange rate is to encourage export. Federal Ministry of Industry, Trade and Investment and other trade supporting institutions must synergize to grow the country's exports.
The EEG fund is different from repatriation because an exporter, when you have exported your goods through the formal means, you're supposed to repatriate, okay? And you repatriate through the domiciliary accounts which you have opened with your bank. And the funds you will use for eligible items, you could put it back, maybe buy machinery and all that through your banks. And then you can also get your fund again through the I&E window, that is the investors and exporters window. You can access your funds there. And that's a very competitive market where you can get your money. It's not the same as the official rate. It's not fixed. Many times it's even higher than that official window, which people have complained about. It's meant to be a very competitive period. Unfortunately, since this the pandemic and all, and a lot of things, the global crisis, we are not exporting as we should. Our main source of revenue, which is the oil prices have crashed. So this has also affected the exchange rate. That's why the black market seems to be doing much better. Otherwise, if you all recall, sometime last year, people even preferred to go to the I&E window than the black market because the prices were almost the same. And as central bank, we are doing all we can to try and make sure we harmonize these rates. And on the EEG fund, it's actually funded through the federal government. The federal government does a budgetary allocation every year towards this fund. And over the years, we've seen that the budgetary allocation is never enough. And unfortunately, due to the protocols of how it's organized, the people that are actually doing the budget is the Federal Ministry of Industry and Trade. Meanwhile, people managing this EEG fund is the Nigerian Export Promotion Council. So there is that, they don't have that, there's a kind of lacuna, and they are not marrying themselves. So this has caused a lot of problems because what they budget is usually way below what the exporters actually need.
In 2017, the Federal Executive Council approved a promissory note program to settle outstanding debt obligation of the government worth over about 3.3 trillion naira, of which the EEG claim is just about 350, like the chief rightly said. as is the process, the DMO cannot issue any debt instrument without the approval of the National Assembly. So to that extent, Mr. President presented the approval of the Federal Executive Council to NAS in 2000, well, I can't remember the exact period, but basically it was presented to the 8th National Assembly, out of which some of the claims were approved while others are still outstanding. Like Alhad from NEPC rightly said too, the DMO will not actually second guess why some of the claims are approved while others are not. So like I said, EEG claim was 350 billion. That was what was submitted to the National Assembly. That's approved by FEC. But what has been approved by National Assembly and sent to Ministry of Finance and then ultimately forwarded to the DMO for settlement was about 195 billion for 270 exporters. So to that extent, the DMO doesn't know about any other exporter that is not in this 270, because the process is, the Fiscal Responsibility Act is very clear. For DMO to issue any instrument, there must be approval of the National Assembly, because it's like, taking it as a debt obligation on the part of the government, now securitizing it. So that is actually what happened. So we don't know why we have 270 instead of the large number of companies that was initially approved by the Federal Executive Council. And to add to the, peculiarity of the circumstance of why up to now it has not been approved for the other exporters, not only for the exporters, because like I said, there are 13 categories of creditors for that 3 trillion naira. But only about 3 or 4 categories have been approved by a National Assembly to date. What about a trillion naira, about 1.5 trillion out of the 3.3? So we don't know what happened. But as it is, we have approval for those categories and we have settled, including the exporters that has been approved. So what delayed it further, to my mind, is that the National Assembly operates on, 8th National Assembly, 9th National Assembly. So with the expiration of the previous National Assembly, the entire submission to the President, to the previous Assembly, is no longer useful or cannot be used by the 9th Assembly. So there is a need for resubmission. So that is, to my mind, what delayed further the approval of, the other, that has not been approved. But like I said, why we have this different approval for some categories and others not approved, we don't know, because the DMO doesn't actually request for the approval. The President requests for the approval, and the National Assembly, based on their discretion, approve others, and that is what we have.
The question we should first ask ourselves is, are we interested in growing export? If we are interested in growing export and we feel some people are taking advantage of the EEG, which I think is true, because I heard, I think one of the reports saying about 1,000 company, what's the name? I don't know if it's 1,000 transaction, if it's 1,000 different company claiming, I think there's an issue with it. If I'm going to work with the data available in Nigeria today as per number of companies legitimately exporting every year, if you have 1,000 company claiming EEG, I think there's an issue with it. I might be wrong. I'm just working based on data. Data with MBS, data with, what's the name? The inspection agents that do this export. If you look at all those data, people that legitimately export every year that process NS are not up to 1,000 every year. So if you have more than 1,000 companies, not more than 1,000 transactions, I will have issue with that. So the concern of government, I think, is legitimate to some extent. Like Chief Dafinoni said, you can't throw away the baby with the bathwater. That some people are bad does not mean everybody is bad. So I think we should find a balance. So I'm of the opinion that if our interest is to grow export, can we focus on other programs that will encourage export? For example, can we look at other things? Because the goal of EEG is to make us more competitive by giving incentive that will make me to, I can sell at a 5% profit, but I know I will get additional from government to cover other profit I will have made on that transaction. Can we look for other way of helping us to be able to grow the export, expand the export? I'm thinking some people are just milking the government the way we have had also under the oil subsidy scam. Now, number one, can we do export credit insurance? I recommended before the Nexim Bank do something in that direction, but I have an issue with Exim Bank did. Exim Bank did credit insurance only for political risk, not for commercial risk. That means it's not going to increase where we can export to, such that at the end of the day, we can increase our export volume and then by that way become more competitive. Can we consider pre-export incentive? The government can say, okay, because your cost of doing business is high, when you export, based on your export, I'm going to pay this percentage of the transport. So if I ship by air, I have an airway bill that I ship, the weight is there, the amount I pay to the airline is there, and government, I'm paying maybe 50%, the government pay the balance to the airline. So that what government is paying for, government can trace it to a transaction, to a good, to a shipment, and then we can avoid all these issues. For me, I think what is important is that we need to support export. If government is concerned about the fact that, okay, the money is too much, we have 20, can you come up with a budget? If you're going to spend 20 billion, what are you going to put it into? Can we do a pre-export incentive so we can see exactly where the money is going? Also, CBN has come up with this single-digit loan, but not everybody has been able to access it. Can we reduce the requirement for those export so that at the end of the day, the single digit can be assessed so that if my cost of fund is low, that will also make me more competitive, because the goal is let's be more competitive to be able to export. And lastly, the issue of iron window raised by Mrs. Chika, which I must commend what CBN is doing, I am of the opinion when we start iron window, you know, and it's interesting how CBN solved the problem 4 years ago. 4 years ago, iron window was 360. 360 when the parallel market was over 400, but CBN rate was about 305, 315 or thereabout. So there was about 14 naira, 45 naira between window and the official rate. Today, all of them are between 380, 385. That's a disincentive. I did an article 2 weeks ago that analyzing a typical product, how the price has gone up and how the export has become non-competitive and even at a loss for some transaction because I'm forced to sell at 380. CBN can do the same thing they did 4 years ago. Can we do about 400 or 420 so that at the end of the day, you know, if everybody come to that CBN window, the price will crash, because that's what happened that time. When CBN did 360, all the people doing 400, everybody came back. We were now between 360 and 365. Can we do something like that this time around, rather than saying everybody should sell at a rate that is not profitable?
Have you missed out on any of the editions of Global Business? Then what are you waiting for? Visit our YouTube channel, youtube.com/Global Business on AIT, to catch up on all episodes of Global Business. Also, do follow us on Twitter at Ime Ohio and our Facebook page, Global Business on AIT, for more info on Global Business. You can also send us a mail, globalbusinessonait@gmail.com, for feedback and enquiries.
Traditional models of business became very, very disrupted, both locally and globally, due to total lockdown and partial lockdown, whichever is applicable. And what's the implication for Southeast businesses? Southeast businesses rely mostly on brick and wall model. We open shop, people come around to buy from our shop. So if we are not able to open the shop, what happens? You know, we lost our livelihood. So it led to piling up of inventory. When you are not able to sell, you just pile up goods in your shop, and some of them that are perishable and fragile, we may lose the investment to destruction. And the key consequence of this is unemployment, which leads to loss of incomes, livelihood, and growing poverty rates. So on the part of Southeast government, it means massive loss of internally generated revenue. And to put Aba in context, Aba Industrial City is one of the largest African suppliers of leather and clothing products, among other products, to various regions of Africa. And the study we conducted last year into this year shows that Aba shoe manufacturers actually produces about 1 million pairs of shoes per week, which translated to over 50 million per year. And most of these were being sold in West, Central, and Eastern African countries. So the consequence of losing this huge volume is significant decline in northern export revenue to Southeast and Nigeria in general. What's the solution? Solution can be found in automation of trading processes through digital trade and e-commerce. The diagram I've put there shows the flow from consumers or customers to e-commerce platform where you order your goods, and then use payment system, like Flutterwave, I know they are here, they will discuss that. Payment gateways, which connects directly to the bank to pay, and then ordering from maybe the seller's warehouse or maybe warehouse of the platform owner. So, and then there's opportunities in shipping the goods to the consumer. Each of these actually provides opportunity for investors to invest and make money in this new normal. So it has actually created a new economy, which is huge, which is massive, which both government and private sector can take opportunities of.
I feel one of the enabling environment to me should be an environment where we can have a source of power. This part of the world, we're so blessed that we have a high insolation. We are the equator. So what our advice, which I've been actually propagating, is there should be a law made that any strategic project across Nigeria, not only Southeast, should incorporate a renewable energy system. Just the way all houses come with roof, we should try to integrate it there. I'll give a typical example. In Enugu State, they have Oboete market. Why can't you put solar panels throughout, with a distributed energy system where they can have a source even to power their computers, even a source to charge their phones? So for me, an enabling environment is an environment that has a reliable energy system to power this technology. And also an enabling environment is an environment that has the equipment, or maybe use the word, the equipment and tools that are needed for the trade, And again, what we call the human capital is key, because if you have all this without having the human capital, it becomes an issue.
That need for mind shift is very critical. And it will not just happen automatically. Institutions like NIDA will need to do more than what they are doing now through sensitization, more education. If you take census of our people, you discover that a whole lot of us don't even know that there is existence of NIDA. And I'm glad that you have also mentioned the role of the government. There is need for the government to also take proactive steps in helping to support SMEs towards this digitalization process. And so that's the way it should be.
I had a customer I have not visited in the last 5 years. And they have changed guards in that company like twice. They have new set of management. I have not met them, but we have been doing that business. I think say they are in Lagos or maybe they are in Aba here. That is what digital businesses can do for you. If we really want to drive the digital business, especially in this part of the country, it is something that we need to be patient about because it has to evolve with time. If you push it, you lose it. Because the major players here, one, they have, let me say, educational limitations for them to be able to digitalize their businesses. That now brings us to the idea of sourcing for competent hands. We need to start encouraging people to employ sales agents who work for them either as a company employee or as a contract staff. Sales agents who are quite good with digital communication, digital business environment.
Well, we've listened to the webinars from that of Export Expansion Grant. You know now that that Export Expansion Grant has a lot of issues. I mean, it is fraught with a lot of issues, and the government, the National Assembly, and government agency have to put their acts in check and put their acts together to be able to make sure this works. Nigeria has to move away from oil. And this is one sure way we can do it. Anyway, hope the government does this fast. And also for our Southeast traders, if you are in the Southeast, or even if you are into the Southeast, I look at Southeast as a China of Nigeria, and that's what many people have said. But even if you're not in the Southeast and you're a trader and you haven't moved to digital trade, perhaps this discourse that you have heard will make you understand better what digital trade is and how impactful it can be. Well, that's the program for today. I'm Imewere Uhiamokai. Join us again next week for another edition of Global Business. And remember, it's always nice doing business with you.